Peloton, because Peloton, you called it the most expensive coat hanger ever.
Yep.
I know your friend, the judge, argued with you on that.
Yep.
And he said, oh, no, people are going to pay, $3,000 forever for look at the big screen you get with it and everything else. And you said, you know what? People kind of like other people.
Yeah.
They like getting in there and having some social interaction. And you were dead right. And if you look at where that stock has come from, folks, Peloton we're talking about, it exploded, and we did have unusual activity like crazy, in fact, in this one. These numbers don't even tell the whole story, folks. Those on the top of the page, 8/20 and 8/14, those two dates, we had unusual activity when it was $2.34. We had it when it was $3.20. Today, Pete, Peloton has popped up over $4 and is holding over $4 right now, $4.50, in fact. So, yeah, it's been a really nice ride. If you had those 3.5 calls, you really hit it hard. If you had the 4 calls in October, boom. Likewise, you hit it pretty hard.
Yeah. And Peloton being the most expensive clothes hanger, I still stand by that, by the way. And when you look at a lot of the different elements to what I was talking about, by the way, the stock was nearly 200. I think it was 187. So I think that somebody was right about the 187 mark being a top, and somebody else was a little bit wrong. And this stock actually has been getting pummeled. But they did put up good numbers, John. I was very impressed with what they were able to do. I think you look at some of the numbers that were year over year, and you look at the earnings, that was a huge improvement. So things are going well. By the way, they're still losing money. And there's a huge, if you didn't know this, short interest in this. So for today, it's having a heck of a day. Now, can it sustain this run? Can it continue this run? When you look at a lot of the different factors of the numbers that are there, John, this stock was underneath $3. It was $2.92. Yes, it's up a huge percentage to get up over $4. They got about 18 to 20% of the short interest. So those shorts probably not feeling that great today, unless the hedge was them buying those calls, in which case they did the right thing, because that's something you and I talk about all the time. That's the squeeze. Well, if those shorts were smart enough to have bought some of those calls to hedge themselves to the upside in case of something pretty big like what they're seeing today, then that was a pretty crafty, pretty smart move. And I wouldn't be surprised if many of those shorts were a part of some of that buying of the two that you just highlighted, John.
Well, the September 350 calls, Pete, went over $1 today, of course, as they should, because the stock went over 450. So that would mean the right to buy it at 350, worth the difference between that, the strike price that you own, and where the stock's trading. So, and you've got till September still, Pete. So I think some of these people may indeed roll up. The October 4 calls went from 17 cents to 90 cents today. So you had two huge winners with very little risk when you were talking about getting into a trade like this. And by the way, it's not an option. If you bought the stock at $3.20 and it goes to $4.50, congratulations. That's a nice trade. How about if you paid 17 cents and it goes to $1? How's that? In other words, you might have put $170 down and you got 1,000 back. Vegas doesn't give you trades like that, Peter. Doesn't give you odds like that on very many things. You got to be pretty damn good to take Vegas for, 5 or 6 times your money. This is an example of exactly that, and you can get it if you go to our website, itsnotanoption.com. That's itsnotanoption.com. That's the book that Pete and I wrote about trading options, and you could learn how to do them, folks. It's not that difficult.